You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike TOSAW from RCM Asset Management, Andrew the Rock Lobster GIOVINAZZI from OptionFit.com, and Mark the Greasy Meatball Sebastian from OptionFit.com. The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. And now, get ready to hit the option block.
All right, everybody. That rockin' bit of tunage means it is time to rock out once again with everyone's favorite bi-weekly option show. Yep, it's time for the Option Block. My name is Mark Longo from the aforementioned theoptionsinsider.com, as well as, of course, from the ever-exciting, at least we hope so, the Options Insider Radio Network. A lot of fun stuff hitting that old network. Hopefully you guys are enjoying all of it, mainlining it all. The second it comes out or at your leisure, we don't judge. As long as you're listening, we like to have you. And, of course, send in those questions, those comments. We do indeed love to hear from you guys. You know who else likes to hear from you guys? Is my cast of colorful characters. Starting off, let's go, how should we do it today? Let's go in order of most tranquil to perhaps least. Let's see. So let's start off. When we're talking seas of tranquility, you're talking the moon, or you're talking this little provincial hamlet known as St. Charles, Illinois, where we are joined once again by the ever-lovable Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program, sir.
Always a pleasure to be here celebrating this fine day of Christopher Columbus and the discovery of the New World.
Indeed, even though no one celebrates it anymore. So we don't even get the day off anymore. Man, when we used to have a day off, it was great. The markets were closed, dogs and cats living together. Everyone was happy. Now we've changed it all, and there's some ruling apparently you can't have a certain number. It's not a real holiday if the markets aren't closed, in my opinion. If the markets aren't closed, it's not a holiday. And unfortunately, they've shifted this one to February, which means there's no day off in October. And, the street could use a few more days off. Let's just glom together a reason. Call it what you will. Call it Discovery Day. Call it Indigenous Peoples Day. Call it Columbus if you want. I don't care. I don't judge. Just give the people a nice day off. I think we can all get behind that sentiment. More federal holidays rather than less. Let's have some government-mandated shutdowns, because otherwise we know in our productivity-mad American workplace here, there's no other way to really get these corporations to take a break. So a few days off here and there might not be the worst thing. Cut down the heart attacks we have here at the very least. Speaking of heart attacks, this guy, he's poised for one at any minute. course, I'm talking about the rock lobster himself, or I guess because the last emperor is here today. Maybe are you once again the cold lobster, Mr. Andrew Giovinazzi of Option Pit infamy?
I guess, to make the emperor happy, I must be a cold water lobster today.
Is there a hot water lobster somewhere? Is that a thing?
I don't know. I mean, I know, don't they pull like some kind of lobster out of Vietnam? I think the Vietnamese eat lobster. Is that a warmer ocean there? To be honest, since I've never known and never grabbed a Vietnamese lobster, I would not know. So
I guess at the end, they're all hot water lobster, right? Because you're pulling them all out of the same steaming pots.
Exactly. Eventually, they all become hot lobsters.
And speaking of the last emperor, we are joined once again by Mr. VRANDOPULO, a.k.a. the last emperor, holding down the active trader hot seat over there from the land of Fidelity. Mr. Last Emperor, welcome back to the program. How go things now in the land of zero commission, sir?
Yeah, I mean, big announcement. It definitely feels like the majority of the clients, at least that we speak to on the strategy desk, they're very frequent traders. This is definitely, great news for those guys and gals. Everything seems to be relatively slow and kind of a benign day. I was going to say, the equity markets, the options markets don't get a break on Columbus Day, but I believe those guys in the bond pits over in Chicago are still pretty old school. I think the bond pits.
God, you sneeze
today.
and the bond guys have a day off. You can't keep track of their ridiculous number of holidays over there. That was the only thing I was envious of when I was trading, was their hours on the bond floor, because let's just say they make bankers' hours look like they're working hard. But we are here. We're working hard. We're hardly working, though, as we keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, let's get to it on what did the last emperor call it? A benign day. It's a good way to describe it. There's a lot of gentle drifting in no real direction whatsoever going on out there. A lot of it's understandable. We're still trying to make sense of exactly what the heck this quote-unquote deal or not deal, or maybe we're close to a deal, maybe we're farther away than we thought. Hey, pump the brakes. Hey, get excited. A lot of that going on out there, back and forth there. So, of course, with all that kind of uncertainty, market really liked it towards the end of last week. It was rally-ho all towards the end of the week. Today, cooler, saner heads prevailing. Maybe some of them taking the bond traders' lead and heading out for greener pastures. Not trading today. Either way, the market's pretty quiet today, at least from a net movement perspective. We'll get to the volume in a little bit. The Dow is up slightly, less than 0.1%. S&P off slightly, about 0.05%. Easy for me to say today. 0.5% would be something. That is not what's happening. And NASDAQ is pretty much unched on the day. Gold up slightly. Crude actually coming off a little bit. WTI off a little bit, off over a point today, about 1.25. So some stuff afoot out there. In WTI 53.5, a little bit shy of that right now. So a little bit of downside out there. Yet again, can't really catch a break to the upside in WTI, at least not for too long. And that continues to be the case today. Our old friend VIX relaxing yet again, shy of the 15 handle. It's about 14.95 or so. So right around 15. That puts it down about 3 points from our last show. Our old friend VVIX also coming off of its highs of north of 100 recently, now back down to a comparatively calm 96, puts it down about 4 handles from last show. Our old friend VXX, after spiking to nearly 27 last week, now back down to 22.5, so threatening that beloved downside that I know a lot of our audience loves so much. And let's see, well, hopefully you like yourselves some earnings. I know a lot of you want this season in your lives. You love it. You need it in your lives. You'll be happy. It's back. And we're back again. Hopefully you like banks, because there's a lot of banks popping off this week. Starting tomorrow, we've got JP Morgan Chase, Citi, Goldman, Wells Fargo, Charles Schwab, BlackRock, and IB on the broker side, just to name a few. You got Bank of America on Wednesday, PNC, US Bancorp, BNY Mellon, Netflix, the little Widowmaker out there, and IBM on Wednesday as well. Thursday, you got Morgan Stanley, KeyBank, E-Trade, and Friday, a little sugary sweetness there with Coca-Cola, Mr. Buffett's favorite name out there, as well as Amex, the old American Express, not the trading not the trading company, not the trading floor, and Citizens Financial. So if you like yourselves some financials, our old buddies Allies there of OPR fame, they're popping off before the bell on Tuesday as well. So if you like yourselves some financials, this is the week for you to go to town. Let's go back the opposite of the way we came. Let's start with the Last Emperor. Mr. Last Emperor, what are your hardcores doing now that commissions have been waived, sir? It's like waving a red flag in front of a bull. So they're off to the races for trading. So what are they lighting it up on this otherwise, as you put it, benign day, sir?
Yeah, I mean, one comment. I was just, looking at the SPX premium going into the weekend. We had a 20-handle sell-off into the close, even though it was a very strong day on Friday. Still, there was a lot of bids still for premium for this week. So I was looking at Mondays, Wednesdays, and Fridays expiration. So the 14th, 16th, and the AMs as well as the PM settled ones for SPX. I just can't believe how premium got absolutely decimated in these short-term options, given the fact that we are flat, and I guess the expectations were, well, we might gap up or gap down coming into the opening rotation this morning. But, premium just got absolutely clobbered in those options. So that's something to keep in mind. It's a lesson for everyone to be aware. Hat off to Mr. Andrew GIOVINAZZI, calling the fact that this week VIX is going to be either sub 15, right, or north of 25, and here we are at 14.86 in the VIX. So
and yet, he can't stick the landing on the crystal ball and vol views. I don't know what to make of that. You give him a whole week of range, he can do that, sure. But ask him for a nice bullseye on crystal ball vol views, not so much. I'm just putting that out there.
I only stick the landing when it matters, when I actually have something on and it counts. So, Konstantin, thanks for the call out. And yes, it was a good couple of days for me.
He's just trying to make up for calling you the cold water lobster.
By the way, guys, I think the differentiating fact between cold water and warm water is that the cold water ones actually have those big crushers on the front. I don't think the warm water Mediterranean lobsters have claws. So that probably speaks volumes in and of itself of the type of creature.
This is good stuff to know here.
I know. Who knew?
Bringing the facts to the show. It's a new thing.
Who knew the Last Emperor, such an expert on lobsters and crustaceans and all things of the sea there? Impressive, sir.
In regards to what Fidelity customers are trading now, the commissions are free on the equity side. A couple of stocks that generally make the list. Number one spot is claimed by Apple. Today, Fidelity customers, for the first time that I've seen in a while, are actually pretty evenly split here, 50-50 on buys and sells. Apple did make a new all-time high, being the largest market cap company in the U.S., and, I think it's the largest publicly traded company around the world at this point. So far, on a relatively benign tape, there has been a little bit of back and forth in Apple, made a new all-time high, pulled back a little bit. Right now, trading at this level of 236.50. I think we spent a decent amount of time at that level on Friday before we gave some of it up. But needless to say, in my views, I think that the options markets are not, doing a whole heck of a lot of volume today. In Apple, 372,000 contracts traded, though. And, in my opinion, we still have a few hours to go. It's got to be one of the more actively traded names, probably. In terms of, the differentiating fact here, not just that we're setting a new 52-week high, and I've discussed some of those levels from 2 years ago or so that we have to look back to. But what's interesting to me is you go back three quarterly reports, so all the way back into April or so of 2019, and what I'm noticing is that implied volatility, looking out 30 days, 30-day to expiration options, has been very flat. It's been trading in this range of somewhere between 25 and on the high side of around 30, and that's where we are right now. So implied vol as of this moment is around 29, looking out 30 days. So, this kind of speaks to the view that, it's not always that just because a stock is trending higher, making higher highs and higher lows, it means that volatility necessarily gets absolutely decimated or names, it does stay bid and it's warranted. Remember that, we're looking for that magic number of 16 for an average of a 1% move representing a 1 standard deviation up or down. When you have implied vol at 30, markets are expecting the stock to move. So if you're looking at your Apple position today, and earlier in the day when it was setting a new all-time high, and you were looking at your positions, if you were in calls, for example, and you weren't really seeing much appreciation, that's why, right? The stock has to move by a significantly larger amount than you would expect out of a movement from the S&P as an example, right? Volatility is double in that name. So beware of that sort of setup. Now, Tesla is the second name that, is back in the limelight, I would say. There has been, a little bit of back and forth between different analysts on the street, raising price targets, dropping them, so forth and so on. But today, stock is up 3.65% at 256, 257 as of this moment. And the last time we've seen these numbers were prior to the last earnings announcement, which was end of July or so. So, interesting name. Volatility has been, relatively high in this name for a while. I know that the options markets are doing pretty close already to 90-day ADV here, 201,000 contracts. So, people are busy in Tesla option pits today. The third name, and this is the one that I'm going to spend just a little bit of time, kind of extrapolating and talking about. You could have, I could have probably done a small segment on the strategy block or the mail block, but I find this to be very important. I'll take a few moments. The third name that doesn't show up, I normally wouldn't even talk about a stock like this, but SES, Synthesis Energy Systems Incorporated, is actually number 2 on the list of stocks traded by Fidelity customers, 55% buys to 45% sells, and the stock is up 217% today. So it's trading at $16.50 right now. Now, the reason why I'm mentioning this name, number one, is never heard of the company. Obviously, it is trading on some, rumored news of a potential takeover. I am not going to speculate on whether or not it's going to happen. I would leave that up to the analysts that are covering the stock, and I don't think any analysts are actually covering this particular name because of how small the company's market cap is. I looked it up, I'll look into it a little bit. It looks like it has a market cap of $7 or $8 million. Total shares outstanding 1.379 million. And I'm looking at the action on Friday when the stock was up, hundreds of percent. And today, Friday traded 33 million shares. And today it traded 19 million shares. So this is the type of thing that right away, right, if you're an investor, if you're a trader, you should be asking yourself, is this one of these caveat emptor type situations where, you definitely need to be aware or beware, buyers beware, right? What am I really doing if it's, 1.4 million outstanding shares and it's trading 30 million times? Who's really, getting in and out of it? Why is it moving as much? Well, that's probably the reason why. Now, second part to this, again, and I'm not speculating on where the stock is going to go from here. It obviously had a tremendous jump, but this morning we sit pretty close to the trading desk, and I heard some rumblings, of conversations or calls of people calling in and saying, "Hey, I'm trying to trade some options on this thing. Why am I getting error messages on Fidelity systems?" Well, Fidelity has a rule to where if the only available options on an underlying are adjusted, then opening transactions cannot be placed on the web. So you have to call in and actually talk to a broker. And the reason for that, right, is this specific situation. So I've looked it up. I'm looking at the option chain here, and SES traded today 396 contracts. 9-day average volume looks like what I'm getting is 1. So nobody ever trades this stuff. Today, all of a sudden, the stock is on the move, and you get, relatively decent volume. I look on the options chain. What is available? Well, the only ones that are available are the October expirations and then the leaps that go out to 2021, and they're both adjusted. So first things first, if you are thinking about opening a trade, right, you got to look at this and say, what is going on? I see the 2.5s and 5s were very active, and those are the only strikes that are available. I know that this is opening paper because open interest was 11 contracts on both 2.5s and 5s for October, 0 on the put side. In January, there was 22 contracts on 2.5 calls. The rest was 0 across the board, and today you're having volume showing up. So you know that at least some of it is most likely definitely going to be opening paper. You look at the adjustment, go to OCC.com. You look at the adjustment, it's amazing, right? Reverse split, 148 back in July. So now you have a 13-share deliverable basically in this contract. So you do simple math. And, for those of you who are not aware, right, of how quickly you could figure out whether something is in the money or not, right? You just take, if it's 13 shares deliverable, 0.13 times the current price, it's basically, relatively speaking, the stock is moving all over the place, but the last time I looked was trading at 13.5. So the strike at the money would be $1.75, and you're buying 2.5s. So it's an equivalent of, a stock would have to trade at 20 if you're trading 2.5s, or at 40 if you're trading 5s in order for you to even break even. So that's primarily the reason, right? If you think that you figured out something that is basically free, I could pay 10 cents or 15 cents for 2.5s, or 5 cents for 5s, and stock's trading at 13, it's free money, right? Well, it's not. There's no free lunch out there. Something is definitely messed up, and if someone is allowed to place opening transactions without really understanding the underlying, this is the risk. I understand it's not huge dollars, 400 contracts, even if they paid 15, 20, 30, whatever cents on average for all of these, it's not that much money to be lost, but still it should be reckoned with, and this is just a great example of that scenario. But that wraps it up for us, guys.
I had a feeling something was afoot in that when I pulled it up while you were talking, and I saw you're right, the 2.5s were trading for 20 cents. And the stock is trading about 16.66 right now. So clearly some other game was afoot out there. So there you go, a little early taste of a strap lock there from the last emperor, breaking down some funky split adjustments and how that could impact your prices pretty clearly. Somehow 400 or so people or 400 or so contracts managed to find their way onto the tape today. But yeah, I was looking last Friday, it was only 10, and then 1. I think the day before that, the ADV is 1. So not exactly a big option name. Not exactly surprising. It's been sitting at around 180 for the better part of at least this past year. So not exactly a lot of options action on a name like that. Where there is options action, though, is a little quiet hamlet known as St. Charles. Uncle Mike, sir, what is lighting up your tape on this otherwise fairly sleepy day?
Have to say, not a lot lighting up my tape today. It is a very sleepy day, as you had mentioned. With everything that's going on, I think that we are eagerly awaiting the earnings that are coming up. As you had mentioned, the banks that are going to be announcing, and maybe it's a good day. It's a bank holiday today, so maybe the banks are taking a break before their earnings announcement. Who knows? But awaiting that, and I think the other thing that we're waiting to see in this market is a little bit more clarity on what this deal actually was with China, how it's going to have an impact. Is this the final say? Is this just the first part of it? How is this going to affect it? Is this legitimate? Is this just some type of thing to where they put a bunch of stuff together and say, oh, we have a deal, and the Democrats and Republicans argue over whether it's valid or not. What's going to happen with this? So I think that's another thing that the markets are waiting on, aside from the fact that it is Columbus Day today. And so this is very much a wait-and-see day today. But the exciting part is that we have a lot to look forward to in these coming weeks. The other thing to mention is October. Crazy things do happen in the market in October. There was something that happened on October 19th a couple years back. I keep forgetting what the name of it was. It was back in '87, I think. Something happened that day. I don't know. I keep forgetting. But we have a lot of things to look forward to, combined with the fact that this is traditionally a very unpredictable month. So not much happening right now, but I think there will be in the next couple of weeks.
There you go. If you're an Uncle Mike client, call him up, and you can make something happen right now. He's sitting there waiting for your call to do something. He's twiddling his thumbs out there in St. Charles. You know, he's never twiddling his thumbs because he's always busy chasing off those clam poachers. Is the Rock Lobster. Mr. Rock Lobster, sir, what's lighting up your tape in this otherwise quiet and tranquil day, sir?
I think it's a little, we're in the anticlimactic zone, I feel like, where we have a detente for what appears to be a couple of months, or 1 month maybe, depending on the next tweet. Maybe Hong Kong slowed things down a little bit. The fact that, the light's shining on China a little more than they would have liked, and now all of a sudden they got maybe too many problems they got to deal with. I'm not sure. But either way, it feels like there is a rough detente, let's put it that way. So where do we go from there, or where do we go from this spot? What am I looking at? I mean, we're starting to get to the low, I would say a low tick for the last, 3 weeks for VIX, from what I can tell. The low end for the cycle tends to be around 13 until, there's another tweet or something. I mean, now literally the market, since we don't have a trade deal, we just don't have trade hell. And we have what I would call a detente for a while. The market doesn't seem to worry about the repo problem anymore. Treasuries have come down, although they're up a little bit today, but came down from high. So basically, you got a recipe for not a lot happening. We have a lot of bank earnings coming out. I think that could be a mini catalyst one way or the other, at least from volatility, because that's mostly what I watch, in the SPX. And I think we just, now at this point, we have to wait for some earnings. How has this trade deal slowed things down, slowed people down, and how that all works out. So it's kind of a wait and see after a pretty active week last week.
It was active last week, not so active today. Let's break down what is lighting up our tapes out here today. VIX come into Showtime, had done a little bit north of 250,000 contracts. So that's actually not a bad day for VIX. It was lighter last week. SPY had hit about 1 million. That's a little less than a third of its ADV out there. SPX, a little bit over 500,000. That's about a third of its ADV as well. The Q's at about 200,000. That's less than a third of its ADV. And the Russell at about 125,000. Its ADV right at close to about 500,000. Coming into today, the top 10 on the most actives out here. It's pretty much only takes 64K to break into the top of the list today, listeners. That shows you kind of what we're dealing with today in terms of what exactly is active, or perhaps maybe not so much out there. And at 64,000 is Amazon. That gets you into the top 10, listeners, followed closely by Netflix, 65,000. That'll get you onto the list there in good old Netflix. Then number 8, good old telephone, 68,000. You can see a trend there. Number 7, Baba, 75K. Number 6, Facebook, 79,000. Number 5, Microsoft with 80K on the tape. Number 4, Bank of America, 85,000. Number 3, AMD, perennial top threer, back in the top 3 again, nearly 200K on the tape. Number 2, the aforementioned Tesla. Last Emperor said you Fidelity folks are liking it, and the market as a whole liking it. 201,000 contracts on the tape. And number 1 with a bullet, Konstantin spoiled it for us. Not exactly a big spoiler, though. I think you can pretty much guess it most days, and you would be right. Yep, it's Apple yet again. Nearly 400,000 contracts on the tape today, so pretty active day. Interestingly enough, both Apple and Tesla are exactly 50-50 call to puts today, which is kind of weird. You don't see that too often. The most biased paper seems to be AMD, with about 71% of that flow coming on the call side of the ledger. Speaking of flow, let's see what flow caught our eye of Sauron today with a little bit of the old odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
Everybody, welcome to the Odd Block. Going to keep the motor running a little bit here today, actually, because we were there wasn't a lot coming into Showtime that really caught our eye, so we had our Eye of Sauron continuously scanning as we were doing our last segment, actually, and actually picked up a couple. So maybe we'll throw those into the mix as well here, and just to make the Rock Lobster's life even more difficult and or exciting. So we're going to kick things off. If that other name we were just talking about there earlier didn't get your boat floated for crazy, weird, funky names, you got a biotech or a pharma to throw in there for you. ALXN Pharmaceuticals, ticker symbol ALXN, going to kick us off here with, let's see, trading today, 102.15, so that puts it up about $3 or nearly 3%. This is the name over the past year. This chart looks like a biotech stock. It's up, then it's down, then it's up again. A year ago, it was trading 127. Then it sold off down to about 93, 94 back in, of course, Christmas Eve. Then it rallied back up pretty firm, back up to about 140 and change back in early April. Sold off again to about 113 in end of May, back up to about 135 in July, and then sold off again down to about 95 or so back in early September. And then it kind of rallied again up to about 110, and then it's kind of sold off down to where it is right now, till today anyway. Coming into today was 94, 95 again last week. So it has rallied a little bit over the last week, up about 7 handles or so. But overall, it's been a topsy-turvy year for ALXN, as you would expect, with the biotech name. And what do we see? What our Eye of Sauron just spit at us moments ago? So it's fresh, hot off the tape, listeners. We've got the Nove 105s. We have a couple names coming in. We'll get to APA in a second. I'm letting the cat out of the bag here. What we saw in ALXN were the Nove 105s, going up about 3,500 times for $3.50. This market also suitably wide for a pretty liquid name. They were $3 at 3.5. Someone gobbling those bad boys up for $3.50. Opening over there on the SIBO. Worth noting they do have earnings on the 23rd. Of October. So coming up in a little over a week or so here. So interesting here on ALXN. So Mr. Rock Lobster, let's kick it off here as I just broke down all the year that's been up. It's been down. It's been up. Someone going to a heck of a lot of trouble and expense to wager it seems like, again, on the upside, sir. And they got a little bit of earnings love with them as well. What's your feel on these pretty meaty upside calls here in ALXN?
This is like a big drug. I know this is kind of like a favorite of people, right? It's like it's a momentum, moves a lot, chart stock, it has followers. I don't know. They have a drug coming out. The ball's not high enough for that. I think just like it just feels like a vanilla. I just want to buy some calls and get long because we don't have a trade deal, and and the stock is kind of poised to do something. It's at the bottom of its range. It was 140. The whole pharma thing is. I think it's kind of like, I don't know what section is in worse shape, the oil sector or the pharmaceuticals, just getting knocked down to multiples. Like the multiple on this is like another one where it's 10 times earnings or something. So I think it looks like an inexpensive, biotech pharma stock, and It's just somebody wants to get long and have some leverage. They're looking for, $10 or more on this. So somebody's looking for a big pounce, which certainly could happen.
By oil, would you perhaps be referring to perhaps hydrocarbon exploration? Because if that's the case, sir, then I got you covered here with our next name. This is the one that's hot off the presses, just going up a few minutes ago. This is in our old friend Apache. No, not on the website. No, this is Apache Corporation, ticker symbol APA, which is engaged in the aforementioned hydrocarbon exploration. I've said it before. I love the companies that have that as their description. It just sounds so glorious and glamorous. Instead of, we dig for oil and LNG. That doesn't sound quite as cool. Let's see here. Over the year, I said 22.08 today, up about 2/3 of a buck, or about 3%. Over the course of the past year, it's been mostly downside in this name. It's trading about 44.5 a year ago, so pretty much double what it is right now. Sold off pretty hard back around Christmas Eve, down to pretty much close to where it is right now, 25.5 or so. And then it rallied back up by April, got up to about 36.5 again. And then it kind of came right back down again by the course of August. It was trading actually below where it is right now. It was trading 20 and change. And then it kind of spiked back up to 28.5 in mid-September. So obviously a lot of that having to do with probably some of the, shall we say, tumult going on out there in certain parts of the globe that have to do with oil and hydrocarbon production. And then that spike was short-lived, and it kind of came right back off again, down to 20 again very quickly. And now it's up back to about 22 and change. And what came across our radar just a few minutes ago, the DEES 25s going up for 60 cents. These are 54 at 61. Again, a weird market. 12,500 times. Total of over 20,000 going up on the day today, Mr. Rock Lobsters. This is some pretty decent size for this name. This is all opening, obviously. There are earnings coming up on the 30th of October, so there are earnings baked into this, even though this seems to be a little bit beyond just an earnings play. A lot of paper gobbling up some upside, Mr. Rock Lobsters, to the tune of 20,000 of the 25s. It's a few bucks out of the money now, but it has been north of 25 multiple times this year, and just a year ago was almost double where it is right now. So 25 is not exactly a crazy bridge. Mr. Rock Lobster, you were talking about just how beat up the oil and indeed the hydrocarbon exploration segment is. What's your spidey sense telling you about these 25s for size here in Apache?
Yeah, interesting that, we had just talked about this the day. Did we have Encanacorp, which I still think is...
Yes, also engaged in hydrocarbon exploration.
Yeah, it feels like, market's still kind of at highs. Oil, XOP, if you look at XOP, TOSAW loves XLE. Just they're sitting around producing dividends, but not really, doing much as far as underlying prices go. I mean, look at the year in this thing since January. I don't know, probably down $7 or $8. And I'll even take a look at the XLE. How's that same thing? Trading right around the bottomish of the range. I don't know if this has to do with climate change or people selling, companies or stocks that are not, copacetic with their climate thoughts. But either way, as a sector, oil and gas, and maybe it's just from overproduction, I don't know, or just that we produce so much, but it feels like a bottom fishing trade. Somebody's looking for a little pop here into the end of the year for sure. The calls aren't that expensive. And it would not surprise me to see some consolidation in this industry, by the way. That would not be a big shock where everything is at this point. Because, it just there's earnings there, there's growth, but there's just no just these stocks have just, they've died as far as any kind of, appreciation goes, which is probably the best time to buy them usually.
Yeah, this one, we've seen a lot of crazy flyers in the hydrocarbon exploration space of late. This one, not exactly the most crazy. Reasonable, 60 cents out to DEES, not that far out of the money. It's a more reasonable flyer, I think we could term it. Tell you what, we will put this in the category of to be watched, and we shall return to our friends APA and see how they fared, if they made money, lost money, just like we're going to do right now with our last name. Our old friends, Mr. Rock Lobster. Remember our days of the infamy of the Men's Warehouse trade. Well, we profiled a little over a month ago, September 9th, to be precise. We profiled a trade in their parent company, Tailored, past tense, Tailored Brands, Inc., ticker symbol TLRD. This is an interesting one. At the time, back on the 9th of September, we profiled Size put palooza, going up out there to the tune of the SEP 7s. SEP 7 puts were going up for $1.70, 12,000 times opening on the Philly. As the day went on, a total of 22,000 of these contracts went up. This is not a name that puts up a lot of paper, listeners. So that was a lot of paper. And yeah, that bumped up the OI to pretty much 22,000 contracts after that day. So a lot of opening paper on this strike. On the day that went up, the stock closed at $6.19. So it was an interesting choice already there. They were buying effectively already in the money puts and paying a pretty hefty premium to do so. $1.70. That's a lot to pay for those puts. And it seemed like an interesting choice for a lot of reasons, because almost immediately after that trade went up, in the next couple of sessions, the stock took off to the north and went up over $7. And it seemed like, oh, this thing's going up the other way. And then almost immediately after that, a few sessions later, it sold back off again. And within a week or so of this trade, the stock was back under $5. And in fact, when these options went out, which was on expiration there in September, stock closed at $4.18. So these puts not quite $3, but close to it there in the money. Also, interestingly, a lot of interesting things with this trade. These puts were still open as of expiration. So there were about 21,740 to be precise, were open on expiration day. So Mr. Rock Lobster, our friend here, decided right before the stock popped to buy a whole boatload of deep in the money puts and pay through the nose for that privilege. He paid nearly $2 for these things. And then it seemed like for a while there, it could have been all right. And then it sold off, and then these puts were looking good. And then he never closed it out. So there's a lot to unpack here. I mean, if this guy really wanted to dump the stock at 7, he could have done it in the marketplace a day or two after and not paid nearly $2 for the privilege. So yeah, this was a weird one all along, Mr. Rocklobster. What do you think is happening in our old friend out here? Once again, Tailored Brands, aka Men's Warehouse, our old nemesis, sir.
Right. Well, this name clearly continues to confuse and befuddle us, is what it looks like. Because we're like paying all that juice for those puts at the 7 handle. Again, it doesn't mean things can't work. It just a little odd on how, and what do they do? Buy puts in stock? Even if they did, the whole thing is just
even if they did it with stock, it still sucks.
it's a total ball of confusion on this one, and I don't really. There must be something behind the scenes that we don't see, because I mean, ultimately they bought the puts for $2, and it looks like they made money on them, right?
Seems that way.
It seems that way, and maybe they just were like, okay, or they have an underlying position that you're like, okay, this is my line in the sand, and if the stock goes below this level, I'm just going to have my stock called away, which is clearly at the bottom of the range. So I guess Men's Warehouse is trading at a even bigger discount. They should have never got rid of that spokesman guy.
Yeah, they should have never got rid of that beard guy. He was clearly
good.
Half the premium of this name. Yeah, if I'm the fund manager, or if I'm whatever executive that has someone managing my stock portfolio for me, and this is how they choose to hedge it, I think I'm giving that guy a phone call and being like, what are we doing here? What is happening? I guess you could be charitable and read this. This guy did it 1-to-1 with stock. He immediately dumped the stock at the high the next couple of days later. So he's making money on the stock already. So the rest is just gravy, right? He didn't need to profit on his paltry options. That's probably the most charitable way you could read this, because pretty much anyway, this guy needed to get short stock, which he clearly did, because that's what happened. Or dump some. He could have done it a lot easier and cheaper by hitting the bid in the market a day or two after this trade. So yeah, this is, once again, you're right. Once again, Men's Warehouse continues to just be our nemesis here. And yeah, let's hope saner, cooler heads can prevail. But we can always count on Uncle Mike for such things as we keep on rolling right on into the strategy block.
It's time to dispense options wit, wisdom, and education. It's time for the Strategy Block.
All right, Mr. Uncle Mike, sir, we've been all over the place on today's show. We've been hot water lobsters, cold water lobsters, befuddling men's warehouse trades, crazy biotechs, crazy split adjustments, and other names. A lot of weirdness on an otherwise quiet day. So we like to look to you for calm, for serenity, to clear our minds with some strategy and or education. So what do you got in store for us today, Mr. Uncle Mike?
I want to go through the importance of keeping some money on the sidelines or not feeling like you have to be using all of your money at one point in time. We had a client a couple years ago that would get mad at one of our other brokers. This is back in the days when we were brokers, but he would get mad at him if he would go a day or two without suggesting a trade to him. Now, keep in mind, the other broker did not have motivation to do such a thing because if you did, in the commission era of things, if you don't have clients don't trade, you don't eat. But with that being said, the broker that we had working with us at the time, he was a very honorable man, was very good at what he did. He wouldn't recommend a trade because he would see the big picture to say if he would recommend a trade and if it didn't work out, then eventually he's not going to have any clients anyway. So with that, the client would constantly call him and harass him, not in too bad of a way, but constantly be frustrated because he would say, what can I trade today? There's got to be something out there to trade. And so finally the broker said to him, well, just because you live in Aspen doesn't mean you go skiing every day. Just because you live on a lake doesn't mean you go fishing every day. And just because you have a trading account doesn't mean you necessarily have to trade every day. So here's where I'm going with this. I've had clients before as well that have kind of had that mentality since I've pretty much been in the fee-based side of this business since I've been independent over 10 years ago. I haven't had too many people saying, come on, you got to trade something. Haven't really had that issue. But I have had clients want to do a condor when a one-legged short vertical would have been appropriate. So in other words, let's say that you are bullish on XYZ stock and you sell a vertical put spread against it. And it's out of the money, you want to collect premium, but you're still a little bit bullish. If you have the mentality that, well, I can make this into a condor with no extra margin or no extra maintenance requirements, which you can at pretty much any broker, doesn't mean just because you can doesn't necessarily mean you should. I'm sure Andrew said that at some point in time. It sounds like something Andrew would say. But where I'm going with this is that I've seen clients do that, and just because they can and they feel, well, I can also get some more premium out of doing this, and then all of a sudden they were correct in being bullish on the stock, but because they wanted to turn their trade into a condor just because they can, it's often hurt them because the stock goes higher and they end up losing money on the bear or call spread. So the first moral of today's lesson of what I want to go through is the fact that if you are selling a put spread because you're bullish neutral, so to speak, meaning you don't think the stock's going to go to the high heavens, but you think it's going to go higher and you want to collect some premium, let's say, doesn't necessarily mean you need to turn it into a condor just because you're getting the free maintenance ability to do so. So that's the first thing I want to emphasize, because if you do that, you're taking away deltas and you're creating something that goes against what your initial sentiment actually was. Second part about this, and this I actually have had some clients get on me about. Let's say that I'm just going to use a random example. Let's say a client has a $3,000 trading account. And I've had it to where I'm bullish on XYZ stock or SPY typically, and I sell a put spread or buy a call spread or do a diagonal, whatever I'm doing. And the actual risk that's in the account is, let's say, maybe $500, $700, something like that. And I have $2,300 on the sidelines, let's say. Well, oftentimes, I shouldn't say too often anymore, but in my earlier years, clients would say, well, you have all this money sitting in cash. If you really believe in the trade, why don't you put more money into it? Why do I not have more money into it? Well, and I would say is that you need money on the sidelines for two purposes. Purpose number one, in case you need to adjust or need to roll a call or something along those lines, whether a trade's going for you or against you, you need to have a little bit of money available for things like that. But the second reason is, and this is kind of a foreign concept to a lot of beginners, is that you might lose. So let's say that I didn't do well on that trade and I ended up losing money on it. Well, I like to have some money left over for a rainy day for the next day. Sometimes you'll see people advertise their auto-execute services or things like that that'll say, I made 400% on this one trade. Well, that's fine, but did you have your whole account in it? Well, hopefully not. And they might not be lying, saying they made 400% on a trade, but you need to kind of look at the big picture, saying, how much did your account make over the course of a 1, 3, 5, and 10-year period? And that can give you a more accurate reading on how good or bad the service is. So the thing that I want to emphasize today is that leave a little bit in cash for reasons that you may have to make an adjustment or you might actually lose a trade. And the second part of it, just because you can, doesn't necessarily mean that you should.
Well, we should, at the very least, continue on into our final segment. It is time to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, everybody. Welcome to Around the Block. Tell you what we're watching for the rest of this week until we can gather here together again on Thursday. I already detailed the litany of earnings coming out. Let's just condense it to one sentence. I hope you like banks, because there's a lot of them popping off this week. Let's go back to the Last Emperor. Let's start there. Mr. Last Emperor, sir, what is on your radar for the rest of this week?
Yeah, guys, Uncle Mike, thank you so much, by the way, for your lesson. I studied this pretty closely in my MBA program, as well as while we were studying for our CMT designations, kind of that laws aversion cognitive bias, for sure. People willing to lose smaller amounts of money as, a poll, just, throw it away. Well, $3,000 is not that much, versus, when you're dealing with larger amounts of money, kind of take a different stance, and it really should be all the same. What I'm watching for the remainder of the week, this week, a few earnings announcements. I think Netflix is going to be interesting. You saw some activity in the option pits today, and they're relatively active on the benign tape. Netflix definitely has been struggling. There have been a lot of cuts to price targets by a lot of analysts out there, so sentiment is fairly low. We'll see how it does. I'm sure that the Stratos is pricing in a pretty decent amount for a move in that name. I'm watching JP Morgan. I'm also watching the big insurer, health insurance giant, the United Health Corporation as well. And then retail sales from the fundamental kind of macroeconomic side of things. The consumer has continued to be the light, I guess, the torch, right, in our economic expansion here in the U.S. So we hope that continues into the future. So going to be looking for that on Wednesday.
And Mr. Rocklobster, sir, what is on your radar for the rest of the week?
Well, we've got, besides earnings, we have how low can the vol go? Can we see 14 tomorrow? Everybody just like, all right, we got to keep this bid. Now it's one of the things without news on the cycle. It's how high can we keep the bid? Wouldn't surprise me if we see a 14, like low 14s tomorrow into settlement. And we wait till earnings come out. By the end of the week, we could see an extremely low VIX like 13 because of, real simply because of the bank earnings are pretty good. I mean, we don't have to deal with negative interest rates. Actually, I have students in Europe, like banks are charging people to deposit money. Like, I don't know how that madness is going to go on where people just stop putting their money in banks and keeping it under their mattress. I don't, it still kind of boggles my mind that it has gone on this long. So it would not surprise me to see it continue to go on. So anyway, that's where that is a long-term thing, but short-term, I think we could see some decent earnings here from banks, and we'll see how corporate earnings have stood up to the to the trade uncertainty, and we're going to know that into this week and then into next week, because obviously people not borrowing money are worried. So if bank earnings are pretty good, that should usually bodes well for the earnings cycle going forward.
over under on what percentage of names of this cycle blame the trade war in some way, shape, or form for whatever is befalling their company. I'm going to say put the over under at 50%. I'm going to take over just because it's too easy. It's too easy. It's too. My favorite still to this day is when SIBO back in the day blamed the VIX futures term structure for their poor performance. That might be my favorite excuse I've ever heard from a company out there. All right, last but not least, Uncle Mike, sir, what is on your radar for the rest of the week?
Well, first off, big thank you to the Emperor for the kind words. And just from what I'm looking at this week, I think that, like Andrew said, the banks are definitely going to play a factor. And just the only thing I would add to what's already been said is that we are approaching the anniversary of Black Friday from back in '87, of course. I referred to it a little bit earlier for those of you that didn't catch it. And so you never know on days like that. It's something that most people are still thinking about when they go to trade that day. So I'm typically not much of a calendar analysis type of person, but definitely watching. And if anything, there'll be some good special stories on the news media about it that will be interesting.
Unfortunately, that's all we have time for on this very interesting episode of the Option Block. But before we go, let's go back around the horn one more time, check in with everybody, see what they have cooking that may interest you beyond just when we're talking here on this show. Let's go back to the way we came. Let's start with Uncle Mike, sir. Uncle Mike, if folks are intrigued, they like today, maybe they want you to do stuff so they can go do something else. How should they reach out to you, sir?
Well, there's not much to do today, but nonetheless, if you do want me to do stuff, feel free to contact me through my website, stcharleswealth.com. I've been in the business for over 10 years as an independent. I really enjoy the option trading side of it, so if you would like to have an advisor that checks those boxes, feel free to contact me.
There you go. stcharleswealth.com is the place to go. And if you also want places to go, maybe to talk about options throughout the day, maybe to have someone help you, guide you, maybe even to read a newsletter or two about such things as volatility, maybe the land of the pit is the place you want to go. Mr. Rock Lobster, what will they find if they go there?
Go to our Vol newsletter. Go to our Silver course, our Pro chat room, any of those stuff. If you want all day long talking about options in a way that is where guys are trading all day long. It's not some crazy chat room. It is like just guys grinding it every day trying to make money. Very knowledgeable room. Come check us out. Send me a note, andrew@optionpit.com. We'll introduce you to our Pro chat room if you'd like. Just lots of learning and how options trade.
Well, it is a crazy chat room, but it's the good kind of crazy. It's the fun crazy. It's the crazy.
Yes, exactly.
That's why I call them the pit crazies over there. If you want to join them for yourself, optionpit.com is the place to go. I've met a few of them now over the years. They mostly seem pretty nice. Don't hold the Rock Lobster against them. That's not their fault. Optionpit.com is the place to go. If you want the Rock Lobster on your phone all day, not just on the phone when you're listening to this show, but maybe you want them to text you. There you go. Optionpit.com. You can sign up for that silver course. He'll be texting you throughout the day. So make for that what you will. Maybe that's exciting to you. That's the case. And optionpit.com. And last but not least, the last Emperor, he probably won't text you. I don't know. Maybe Fidelity will do that. I don't know. But he won't charge any commissions to trade. That's pretty cool. Mr. Last Emperor, if they head on over to fidelity.com/options, what will they find, sir?
Fidelity.com/options to open an account, apply for options trading. I would say not only the differentiating factor that we are zero commissions like everyone else, but maybe some of the best execution quality of routing your orders to appropriate places with your particular interests in mind as clients. This is the place to be. My name is Konstantin. You can reach out. I can't text you, but I can definitely speak with you on the phone if you're a client already. We could email back and forth as well. Also could go to fidelity.com/coaching to see us in the educational classes that we do on a daily basis.
There you go. Call them up. Ask for the Last Emperor. They'll know who you're talking about because he's the last one. He's the only one they got. Fidelity.com/options. And that's a good point. That now we're in – the game is really afoot now in the brokerage space because we've kind of moved past the surface level, the surface pain point everyone had with commissions. Now it's all about the really important stuff. You're right. The execution. It's about the tools. It's about the platform. It's about the customer service. A lot of the other things that are equal to, if not more important than the actual commissions. And so everyone was so focused on commissions. Now that barrier has been removed. So you guys can focus on the important stuff. Maybe you want to head over to Fidelity.com/options. Kick the tires for yourself if you have a question. Call up the Last Emperor and the rest of the crew there. They'll be happy to talk to you. And on behalf of the Last Emperor and Uncle Mike and the Rock Lobster, or the Cold Water Lobster, whatever you want to call them, and indeed myself, I want to thank all of you out there for downloading, streaming, and subscribing. If you want some more in your veins, maybe on the crypto side of the space, stay tuned. We'll be back in about exactly an hour with the folks from Ledger X. And if you know anything about them, they're not exactly shy about expressing an opinion or two about things that are quite divisive. So stay tuned for that. We'll be back in exactly an hour for that. You can listen to this on whatever device you're listening to this now. Just hit the next button, and you should be good to go. Otherwise, we'll see you back here on Thursday for more of the Option Block.
The Option Block is brought to you by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.